Hey traders, welcome back to the channel. Markets are heating up again, and today we've got a lot to cover. Amazon layoffs, Nasdaq gaps, AI stocks exploding, and the big question, is this the turning point or the top?
Yeah, a ton's happening this week. Grab your coffee, hit that like button, and let's dive right in.
Quick reminder before we start. Everything we talk about here is just our opinion and market analysis. It's not financial advice, not a trading signal, and definitely not a call to buy or sell anything.
Exactly. Always do your own research, trade smart, and use this for education and entertainment only.
So with two open gaps on the Nasdaq 100, one from Friday and another from Monday, everyone's asking the same thing. Is it time to start trimming positions or maybe time to run from the market?
And just to stir the pot, Amazon announced 30,000 layoffs joining Target and Applied Materials from last week. Makes you wonder if this rally is starting to fade.
Before we jump to conclusions, let's ask, do two open gaps really justify selling?
Statistically, 80% of all gaps eventually close, but no one can tell you when, and that's the key.
Here's what the data says. Over the past 3 years, the Nasdaq opened 1 to 1.25 gaps dozens of times.
And only 12% of those filled immediately. So yeah, most gaps do close, but not overnight. If you're stressing over it, relax. Patience usually wins. Fun fact, this episode is recorded on October 27th, one of the strongest seasonal bottom dates historically.
That's right. The 27th often marks the point where markets reset before a year-end rally. So tell us in the comments, are you holding or taking profits?
Quick numbers, Nasdaq up 1.83%, S&P up 1.23%, Dow plus 0.57%, Russell plus 0.34%.
All that before the open, driven by optimism over a potential US-China tariff framework.
Tech's leading, materials flat.
Dollar steady at 98.8, Bitcoin trading around $114,000, still not joining the equity rally.
Gold broke $3,980, hitting a 38.2% Fibonacci retracement. If it drops further, we could see $3,846 next. Meanwhile, the 10-year yield fell below 4%. Another hint, rate cuts are coming.
In the AI race, things are shifting fast. Gemini is still down 60%, but Grok is up 5%, Claude is up 11%, and DeepSeek just passed QWEN, up over 100%.
AI is not hype anymore, it's competition, and the market's rewarding agility.
Earnings on deck, PayPal, UPS, Corning, United Health, Visa, EA, and Seagate.
It's a packed night. These results will shape the next week's sentiment across sectors.
A major investment house downgraded Berkshire Hathaway, saying Buffett's succession could shake confidence.
But technical traders saw it early. BRKB slipped below its moving average weeks ago. Charts usually whisper before the headlines scream.
Citi and other major banks are now building digital asset payment systems for 2026.
Expect smaller IT teams, more blockchain infrastructure, and massive automation. Winners will be companies like Circle and Chainlink leading that shift.
iRobot is collapsing. Potential buyers vanished. They might need a pivot to survive.
Meanwhile, Nvidia signed a $1 billion deal with Deutsche Telekom, and AMD got $1 billion from the US Energy Department to build 2 new supercomputers.
AI isn't slowing down. It's accelerating demand for energy.
Those 30,000 Amazon layoffs, it's not collapse, it's restructuring. They're redirecting teams to scale data centers for AI.
They even signed a deal to reactivate a nuclear plant to power future workloads. That's how massive this infrastructure race is.
Tesla jumped 5% after showing off Optimus, its humanoid robot. People watching it in Times Square were blown away.
No remote control, it's self-operating with built-in AI. That's the future Elon's selling. Automation meets personality.
Qualcomm copped 20% intraday on its new chip, then cooled off fast.
Bank of America says it's not chasing NVIDIA's flagships, but mid-range AMD territory. Still, we called it. Above 164 was the trigger, and it hit perfectly. Trade done. Time for the next setup. Let's clear something up. All-time highs aren't danger signals. Since January, S&P's up 16.7%, Nasdaq 22.9%, Russell 13%, Dow 11.7%. Selling every high meant missing the whole move.
Momentum's not your enemy, hesitation is.
Since 1950, markets after October 28th have gone green most years. November is statistically one of the strongest months.
So yeah, we might already be in the early stages of the year-end rally.
Election year cycles usually bring renewed buying pressure.
Funds that lagged all year are chasing performance before reporting season. That inflow alone can keep the rally alive through December.
So, can the S&P 500 hit 7,000? It's already near 6,875, not far at all.
We'll see pullbacks, sure, but with strong volume and rising sentiment, the trend is clear. Bulls are in control.
All right, traders, that's the rundown. From Amazon layoffs to AI energy deals, the market's alive and shifting fast.
Keep your eyes on yields, tech earnings, and that seasonal momentum. It's going to be an interesting close to 2025.
Thanks for watching.
And we'll see you in the next one.